Buy dividend growth stocks as Fed cuts interest rates. That's the biggest news that have hit markets recently. Now we're going to go over why dividend growth stocks are a wonderful bet now that rates are falling. So let's start off with money in motion. If you look at the level of money market assets, okay, this is this blue line right here. This is showing you that a lot of people, a lot of investors are parked in money markets to the tune of $6.3 trillion. Here we've got the red line. That is the Fed funds effective rate. It's set to come down, right? We already know that the Fed cut rates. They're set to cut them even more. So the question becomes, where do we think all of this hot money that's sitting in money markets, where is it going to go? Let's keep going. So here's why you want to be focused on dividend growth stocks. Number one, it offers a lot of income, right? That's what one area that the money market crew is going to be looking for. They're going to be looking for income replacements. But there's another bigger reason of why you want to consider dividend growth. 37% of the S&P 500 long-term returns is from dividends. So this is a really awesome graphic here from 1930 through 2024. It's breaking down the gains that are coming from the price of the S&P index and the dividends. So a couple of things I want to point out here. Whenever the S&P is down, you notice that dividends are a larger contribution to that return. And then whenever the S&P is up, which we've had some pretty big up years recently, you'll notice that dividends happen to be a smaller portion of the gains, but by and large, over a third of those returns of the market are due to dividends. So if you're not investing in dividends, you're missing out massively. But let's keep going because we want to show you the importance of dividend growth. A lot of investors, they focus on high dividends. I saw that the other day when I was looking at some social media. That is a recipe for disaster. You want to be focusing on companies with a strong business plan that can continue to grow their dividends year after year. Here is showing you the S&P 500 annual dividend payouts. This is in billions since 2000, and we can see that there's a 6.8% average annual dividend growth. So just think of some of the best companies that are in the S&P 500, awesome businesses, continue to raise that payout year after year after year. That is the holy grail of investing. So that's the trend you don't want to fight. But now let's look at one other area that few people are focused on, and that's volatility. We know that rates are coming down. Typically, that can spell some extra volatility. Check this out. We're looking at the volatility index, the VIX. Turns out that when the VIX increases in a month, dividend stocks actually outperform. So this is from 1990 through 2023. Consider this. When the VIX is up less than 10%, you see that dividend growers outperform by 0.21 versus non-dividend payers. When the VIX is up 10% to 20% in a month, you see outperformance of over 1%. When the VIX is up over 20%, so a nasty month, you see that dividend growth outperforms by over 200 basis points. So not only are we telling you that there's this income driver that you want to focus on, but also it can buffer your portfolio when you have these episodes of screaming volatility. So what does this mean for your portfolio? Hopefully you're getting excited because you're starting to understand that dividend growth is a powerful driver of portfolio performance. Let's go ahead and check out dividend growth versus high dividend. This is a very important chart, and we're looking at the FTSE High Dividend Index, VYM, comparing it to the S&P Dividend Growers Index, VIG. So on a one-year basis, they're basically tied. Okay, as rates are falling, people are just piling into everything with a dividend. But if we go back 3 years, we can see that high dividend has been outperforming recently. But as you go out further, 5 years and 10 years, you start to see the Dividend Growers Index start to outperform. That is that quality tilt that we really highlight at Map Signals, is focusing on outstanding companies, right? Don't chase high yields, chase companies with an all-star business profile. Those are the ones that are going to stand the test of time. So let's go ahead and look at why we also think you want to consider VIG versus the high dividend VYM. And it really comes down to the sector mix. So if you look at the dark blue, that's the dividend growers. You start to see there's a lot more tech, there's healthcare. Compare that to VYM, which is I would say a little bit more defensive, right? You've got utilities. I know that's been a hot area, but you also have energy, which has been down in the dumps lately. So if you want a little bit of a growthier profile, I say that loosely, the dividend growers is going to be the area that you want to focus on. I really love this piece. Leave us a comment if you're considering dividend stocks. I think it could be one of the hottest areas of next year as rates are set to decline. We actually just put together a top 32 list of dividend growth stocks for 2025. It's an all-star list. So if you're looking for some stocks to potentially do some extra research on, we have you covered. Head over to mapsignals.com. And last but not least, if you like what we're doing, make sure to like and subscribe to our YouTube channel. I'll see you next time.